Well, despite the recent turbulence on global markets, the government is pressing on with its plan to float Medibank private, hoping to raise up to $5.5 billion. It's been advised there's keen interest from both retail and institutional investors. But analysts warn the float looks expensive and private health insurers are still to feel the full effect of competition from price comparison websites. Neil Woolridge reports.
The numbers have been crunched and the paperwork signed. Now comes the sales pitch.
Soon, you'll be able to own a share of Medibank Private.
Medibank Private represents an attractive financial profile supported by a debt-free balance sheet.
The government has released the prospectus for Medibank Private share market listing in late November in what will be the biggest privatisation since QR National in 2010. Medibank Private is expected to hit the market between $1.55 and $2 per share, valuing the health insurer at between $4.3 and $5.5 billion. And it's forecasting a dividend of 4.9 cents per share for the 7 months to June 2015, an implied yield of up to 5.4%.
It's a large company by any standards. It's a highly performing company. It's a very attractive sector. So we're very confident of getting a strong institutional interest from offshore, but equally, we think this is very much down the fairway for Australian institutions to invest.
The government intends to sell its entire stake in Medibank Private and is promising Australian mum and dad investors will pay no more than $2 per share. But the Finance Minister, Matthias Cormann, says there is flexibility if the already fragile market sentiment worsens.
If there was an unexpected deterioration in market conditions, the sale is structured in a way that at every step of the process the government can make relevant decisions to adjust.
Medibank Private's Managing Director for the past 13 years, George Savides, says the account shows strong performance this year and the company is forecasting revenue growth of 4% in 2015.
Pleasing as well, our gross margins have improved to 13.5 in the financial year 14, against an industry trend that has seen material decline in margins.
Also enjoying some healthy growth will be the MD himself, whose pay will triple from $1.2 million to $4 million once the company hits the bourse. Critics also point out that Medibank Private makes just 3.6 cents in profit for every dollar of premium revenue compared to NIB's 5 cents.
There's always a lot of inefficiencies in a government-owned business that come out over the years after the float. So we've seen people do wonderfully well out of businesses like CBA, the first Telstra float, even more recently QR National.
Fund manager Steve Johnson says there can be value when a government sells an asset, but he would not invest in Medibank Private based on the prospectus numbers.
I'd say the bottom end of the range is reasonable, the top end of the range is quite expensive.
And there are warnings that Australian private health insurers are too profitable and yet to feel the full effect of competition from price comparison websites.
I think there should be more competition in the market, and you're seeing the comparison websites get more and more market power out there, and the more people can easily compare one product to the other, generally the lower the margins across the industry are going to be.
While the government has received 750,000 applications for the prospectus, now comes the hard part, turning those expressions of interest into cold hard cash.
And I'm joined now from Canberra by Finance Minister Matthias Cormann. Minister, welcome to the programme.
Good to be here.
Now, pricing these privatisations are notoriously tricky, I know, Minister, but you presumably want sort of a Goldilocks price. You don't want to underprice it. I was surprised at how wide the range was.
Well, we've been taking advice from the experts in relation to setting that indicative price range. An important point here to make in the context of your story just now, it is just that, an indicative price range. And of course, ultimately, the final price will be set by a process, in particular through the book build with institutional investors, where market forces will set the foundations on what the final price will be. And the final price could be above the indicative range, it could be within the range, or it could be below the range. So, but what we've said, I mean, the significance of what we've announced today is really that there is certainty for retail investors that under no circumstances will they be expected to pay more than the $2.
Now, we've got a fair time, of course, in that pricing process. In the meantime, we've had warnings from people like the RBA's Ralph DeBell talking about possible violent downturns in the equity markets. markets. If things went really bad, would you consider pulling the deal or just retaining a stake, I think as is suggested in the prospectus?
Well, where we're here today, I mean, we are proceeding with the sale of 100% of the government stake in Medibank Private. But of course, I mean, if if the market was to unexpectedly deteriorate moving forward, if the market conditions were to unexpectedly deteriorate between now and the expected public listing of Medibank Private, the sale is structured such that we do maintain the flexibility to adjust the sale, and indeed we might decide not to proceed with 100% of the sale. But that is not our current intention, and all of the advice that we've got is that there is strong retail interest, there's strong institutional interest. I mean, Medibank Private is a strong business with a well-known brand. It provides health cover to more than 3.8 million Australians, and we're very confident from where we are here right now on the basis of what we know today that this is the right time to proceed.
Pricing, of course, will be driven as much as anything by future growth and ability to put the lid on costs and improve claims management beyond 2015. Now, I think George Zafides was quite confident about next year, but beyond that, I guess that's what you're going to have to convince institutional investors on your roadshow.
Well, and I guess that is core business for private health insurance fund. I mean, there are 34 private health funds in the Australian private health insurance market that all face the challenge of trying to keep costs down while delivering the best possible value to their customers. And I'm very confident from where I'm here. I mean, Medibank Private is a strongly performing business today, but in private ownership, we believe that they can do even better. And in terms of pursuing growth opportunities into the future, obviously, being able to operate as a truly independent commercial business, being able to access capital markets and the like will offer new opportunities to Medibank Private in private ownership to pursue those opportunities moving forward.
What about these price comparison websites? It could be quite a different playing field.
Well, I heard that commentary in your story before. I mean, I got to say, I was a senior executive in a private health fund in Western Australia about 10 years ago and over a period beyond that. And we were dealing with these comparison websites then. I mean, I don't agree with the proposition that somehow this is a new phenomenon. This is a phenomenon that has been actually in place in private health insurance in Australia for some time. I mean, private health insurance in Australia is a well-functioning, very competitive, well-regulated market. It's a very mature market, and of course, in the context of the ageing population, where access, timely and affordable access to healthcare will become more and more important, we believe that there will be opportunities for Medibank, as currently the largest market participant, to pursue opportunities into the future.
I suppose one area Medibank might be vulnerable is, again, with the markets. 18% of its $2.2 billion portfolio is in growth assets. If the market turns south, won't that affect the pricing quite considerably?
Well, I mean, all of these matters are addressed in the prospectus, and of course, any business of the size of Medibank, there are various risks at any one point in time that they have to manage, and Medibank Private has got the appropriate risk management frameworks in place, and the appropriate disclosures in relation to those sorts of risks are made in the prospectus. I mean, the general point I would make here is that any Australian who is considering investing in Medibank Private should, of course, consider all of the information that is in the prospectus before making a judgment on whether or not to proceed with an investment.
And Matthias Cormann, how much of the funds that you raise would be put towards the asset recycling programme, and to what extent might some of the infrastructure that Barnaby Joyce would like in his green paper be able to take advantage of that?
Well, we've said that we would reinvest all of the proceeds from the sale of Medibank Private in job creating, productivity enhancing infrastructure through our asset recycling initiative. The asset recycling initiative is a specific initiative that was announced as part of the budget, and it of course seeks to also leverage further investment by state and territory governments, encouraging them to proceed with the sale of assets that could perform even better in private hands and might no longer be appropriate for government ownership. Yeah. So this is really part of a very specific part of our plan to build a stronger, more prosperous economy where everyone can get ahead.
And Minister, finally, putting the girly man talk aside, I see the Parliamentary Budget Officer, Phil Bowen, has warned that the surplus would inevitably shrink if the 18 billion, I think, in budget savings measures were not passed by as much as 1% of GDP. Do you agree?
Well, it's very important that the Parliament passes the budget the government has put forward. I mean, we've put forward the necessary plan in order to ensure that we can protect our living standards and build opportunity and prosperity for the future.
Do you think it could be that bad, though?
Well, I mean, we of course deliver our own budgets and our own budget updates, and the government's next budget update is the mid-year economic and fiscal outlook, which will be delivered in December.
We'll look at that very closely in December.
Indeed.
Minister, thank you very much for joining us.
Always good to be here.
Well, in the